Let's now focus what we are going to have in our assets, in our balance sheet I mean. So balance sheet, we have assets, we have liabilities and shareholders. That is going to make our balance sheet. So with cash we are not going to be able to complete it now because we don't have the cash, but we have the account receivables. To get the account receivables, we are going to get the receivable days divided by the total number of days in a year. Then you multiply that by the total revenue for us to get the account receivable for the next 3 years. We just fill that right, and we are going to be able to get that. Then we have the inventories. The inventory also, we got that by getting the inventory days, which is that divided by the total number of days in a year. Then we multiply it by the cost of goods sold, which is that we are able to get the inventories for the next 3 years. Cash, we're just going to fill it. The cash there is supposed to be the cash and equivalent in the end of the year. That information we get it from the cash flow statement. So we're just going to get that for now. Fill that right. Though there are no value which is going to come there. Then now the total current assets, we just alt equal, then we get that value. Then we fill that right to get the total current asset for the next 3 years. Remember, we'll come back here for cash. Then we have the property, plant and equipment. So for now, what we are going to do, because there's not much information, actually there is information on the property, plant and equipment. We know that the capital asset turnover ratio is given. So the capital asset turnover ratio is the ratio between the net sales and the capital assets. So for us to get the property, plant and equipment, we are simply going to do that. We are simply going to get revenue divided by our ratio to get that value. We simply do shift right. Now to get the total assets, that's going to be E that's going to be equal to E63. We fill that right. Now get the total assets for now. Then we have the accounts payable. Account payable is equal to payable days divided by the total number of days in a year times cost of goods sold, which is that. So the account payable, we are going to get that by that. So other current liability is here. Other current liability is a percentage of revenue. It's a percentage of revenue, so we are going to get that value there. Just fill that right. Then now to get the total current liability, you're just simply going to get alt equal, then shift arrow, then control R. Then long-term debt, we fill this. If you did not follow the last lesson, then the long-term debt, we get it from here, from the assumptions and drivers to fill that. Then we have the common stock and additional paid-in capital. So this one also we can get it from the assumptions and drivers which were provided by the company, which is going to be an equal amount of value for the next 3 years. Just do that shift right. Then we have the retained earnings. The retained earnings, we are going to get that information from down here, where we have the retained earning from supporting schedules. So to get the retained earnings, what we are going to do is that first of all, this is the retained earning for the beginning period of year 2023. So we are going to get that. Then the second one, we are going to get the net income. That one we get it from income statement. Then after getting that, we have the dividend, which we were able to get from here. So it means that for us to get the retained earning for the year ending 2023, we are going to have the earnings beginning of that period earnings for that period plus the net income. Then we subtract the dividends which were given out. That one is E121 to get that. So this is simply, we are going to fill this right. Net income also we are going to fill right. Then the dividends also we're going to fill right, so that those values just going to come in place. So when we do that, we are able to get the retained earnings, and therefore we can now go back to our retained earnings, then equate it to the retained earnings we obtained here. Then we just fill that right, and we are able to get that. So the total shareholders equity is going to be equal to, or you can simply alt equal to get the total shareholders equity. Then you just fill that right, you get that. Then now the total liability under the shareholders equity is going to be a sum of that plus the long-term debt plus the total shareholders equity, which is E76. When you fill that right, you are able to get that. So as you can see, our balance sheet check, we still have some errors. This errors is coming because the total liability plus shareholders equity is not the same as the asset actual, for example, the periods which we are forecasting. This is because we have not been able to get the cash. This one we are going to get in the next lesson, so that we are going to complete balance sheet and cash flow at the same time.